Hello everyone, I am Surbhi and I welcome you in my channel Key Differences. Today in this lesson, we will talk about the differences between direct and indirect taxes. So friends, without further ado, let's move on to our video. Tax. Tax refers to the compulsory financial obligation levied by the government on the income, property or profit of the persons or included in the cost of goods and services. Here the word persons include individuals, Hindu undivided family, company, partnership firms, association of persons, trust, etc. The government collect taxes in order to finance public utility services or public expenditures or undertake government activities. On the basis of nature, taxes are categorized as direct taxes and indirect taxes. Now we will discuss the two types of taxes in detail. Direct tax. Direct tax refers to the tax whose incidence and impact is borne by the same person. It is a financial charge levied directly on the assessee who pays the tax directly to the government. These taxes are based on the person's ability to pay. That is, the higher the income or wealth of a person, the higher will be the tax liability. The burden of such taxes cannot be shifted to another person. Now we will look at some examples of direct taxes. Income tax. Income tax is a tax levied on the total income of a person calculated under 5 heads after allowing deductions and set off and carry forward of losses. Here the 5 heads of income are nothing but the sources of income. That is, income from salary, income from house property, profit and gains from business or profession, capital gains, income from other sources. Next is wealth tax. Wealth tax is levied on the property or wealth owned by a person. Estate duty. Estate duty is paid in case of inheritance. Corporate tax is paid by the corporate entities on their profits. Lastly, gift tax. When taxable gifts are received by the individuals, they have to pay tax on it. Indirect tax. Indirect tax is a tax in which the taxpayer is just the hands who pays the tax, but the actual burden of tax falls on the final consumers who buys the goods or receives the services. Basically, indirect tax refers to the tax which is collected by some other person on your behalf and deposits the same to the relevant government, such as tax collected by restaurant, shops, e-commerce websites, parlors, etc. from you on the goods purchased or the services provided. The amount of tax is included in the MRP, that is max retail price. Now we will look at some examples of indirect tax. Goods and services tax, also known as GST. GST has replaced a number of taxes in India. It is a comprehensive, multi-stage, destination-based tax imposed in India on the value addition. Custom duty. Custom duty is levied on the goods imported in India as well as exported from India. Now come, let's discuss the differences between direct and indirect tax. Meaning, direct tax is a tax levied on the assessee itself who pays it directly to the government. On the other hand, indirect taxes are the taxes which is collected by the last intermediary of the supply chain from the ultimate consumer and deposits the same to the government. Here the word ultimate consumer means the person who is going to buy the goods or services for its own consumption and not for the purpose of resale. Nature. Direct taxes are progressive in nature, as high income earner pays higher tax in comparison to the low income earner, depending on the slab rate in which the income falls. As against, indirect taxes are regressive in nature, as it does not distinguish between rich and poor. It is levied on all the people equally in the country, and so it affects inversely on the low income group. While the subject matter of direct taxes are income, wealth and estate of a person, indirect taxes are levied on goods and services. Incidence and impact. In case of a direct tax, incidence and impact borne by the same person on whom the tax is levied as the tax liability and the burden to pay the tax resides on the same person. Conversely, in case of an indirect tax, the incidence and impact of tax falls on different persons, and that is why it can easily be shifted to another person. Next, tax evasion can be possible in case of direct taxes due to lack of administration. On the contrary, in case of indirect taxes, tax evasion is just next to impossible as it is charged on goods and services. Price and demand of goods. Direct taxes does not affect the price and demand of goods and services. On the other hand, indirect taxes increases the price of the goods and services, which in turn decreases its demand. Coverage. When it comes to coverage, the coverage of direct taxes is lower in comparison to indirect taxes because there is only a specified group of people which are covered under direct taxes. On the flip side, indirect taxes are levied on everyone, that is, all the people in the society, because it is included in the value of goods and services. Now if we talk about the event on which the tax applies, in case of direct taxes, when the income of the assessee falls under the specified slab rate, tax will apply. Contrary to this, in case of indirect taxes, whenever the transaction takes place, the tax will apply. So friends, this brings me to the end of this lesson. I hope you find the lesson very helpful. However, if you want to study the topic further in detail, you can visit our official website, that is keyreferences.com. Here you can find a detailed comparison of direct and indirect taxes along with their definitions and similarities. Links are also provided in the description below. So guys, please like this video, share it with your friends, and if you have any queries or feedback for me, then feel free to comment below. And guys, don't forget to subscribe our channel and hit the bell icon if you haven't subscribed yet to never miss an update from Key References. Until next time, this is me Surbhi signing off.